Good afternoon to our audience. We're glad you could join us today for our Bank Secrecy Act webinar. My name is Catherine Baxter. I'll be your moderator for today's event. And we do have a special treat for you. We're going to be addressed by our chairman today. But before we listen to our chairman, here's a few administrative items. So that you can hear this webinar well, please adjust the volume on your computer. To resize these slides, drag the bottom right corner. From this site, you will need to allow pop-ups. So we have a Q&A today, but what we'd like you to do is to use the Ask a Question feature on the left-hand side of your console. We'd like you to ask questions throughout the webinar. Don't wait until the end. And when you ask your question, please address your question to the speaker. And always, in 3 weeks, this webinar will be closed captioned for on-demand viewing in our learning management service. So as I mentioned, we have the privilege of having the NCUA chairman with us today. So without further ado, I'm going to turn everything over to the Honorable Rodney E. Hood. Mr. Hood, please.
Great. Thank you, Catherine. Good afternoon, everyone, and thank you for joining us for today's webinar on a review and reminder of the Bank Secrecy Act. During today's presentation, you will receive valuable information on best practices in Bank Secrecy Act programs and avoiding pitfalls from noncompliance. Topics for today's discussion include the following: components of an effective Bsa program at your credit union, the top 5 areas that may need special attention at your credit union, and real-world case studies discussing the top 5 areas that could be problematic for Bsa compliance. Earlier this year, in a letter to credit unions detailing NCUA's 2020 supervisory priorities, we put at the top of the list that Bank Secrecy Act and anti-money laundering was a key component of an effective program. Technology, globalization, and most recently, the COVID-19 pandemic have created new opportunities and challenges with respect to money laundering, illicit and terrorist financing, and financial fraud. The FCUA, the Federal Credit Union Act, requires the NCUA to conduct an examination of the credit union's Bsa AML program during every examination, and fraud detection methods are incorporated into the Small Credit Union Exam program. Smaller credit unions can lack adequate resources, which can contribute to fraud losses and money laundering opportunities. So we at NCUA want to make sure we are providing timely and relevant information where appropriate so that smaller credit unions are in compliance with Bsa requirements. The NCUA meets regularly with our colleagues at the U.S. Department of the Treasury, and specifically the Financial Crimes Enforcement Network, also known as FinCEN, as well as the federal banking agencies, to improve the transparency, efficiency, and effectiveness of our regulation and supervision of Bsa and AML. Some key accomplishments to date include addressing improved efficiency through shared resources and collaborative relationships, encouraging depository institutions to explore innovative approaches to meet their Bsa AML compliance obligations, and risk-focused Bsa AML supervision. The NCUA is also working to increase collaboration and information sharing with law enforcement, our regulatory partners, just to name a few. The NCUA is committed to strong anti-fraud and Bsa programs in today's changing, challenging, and dynamic environment. As Vice Chairman of the Federal Financial Institutions Examination Council, also known as FIFIAC, we are also in the process of updating the FIFIAC Bsa AML Examination Manual to focus Bsa reviews on the risk present in a financial institution, incorporate recent interagency statements, and provide greater clarity on existing content. In addition to the FIFIAC Bank Secrecy Act Anti-Money Laundering Examination Manual, the NCUA will continue to communicate with credit unions, engage with law enforcement, and continue to collaborate with other banking regulators on several initiatives, including updates to enforcement guidelines, issuing guidance regarding politically exposed persons, and providing clarifications and ways to improve suspicious activity reports, SARs, and currency transaction reports, CTR filings. Credit union efforts in this area are going to really be important to keeping the America's system of credit safe and sound for many years to come. So thank you all for joining us on today's call. I'm delighted to be with you all, and I want to now turn the floor back over to Cathryn to continue with today's program. Thank you, Cathryn.
Thank you, Mr. Hood. We really appreciate that. So I'm going to ask our audience to do a favor for me. We want to make sure that all of you can hear us very well. So I'm going to send you on your screens a pulse check. You'll see a thumbs up and a thumbs down. If you can hear us very well, please select the thumbs up. If you can't, the thumbs down. You ready? Here it comes. So far, all right, we have quite a few coming in. Okay, looks like so far everybody can hear. I'm still waiting to get some people are having problems. If you're having a problem with your audio, please use the Ask a Question feature and send us a message there to our IT people so that we can help you out, because we definitely want you to hear all of this webinar. All right. So now we know the pulse check works well, okay, because we've gotten a lot of responses. Thank you so much. Now I'm going to turn the webinar over to my host, who's Mr. Damon Frank, and he's going to take it over from here. Damon, please.
Thanks, Cathryn, and hello to the audience. We have, as you can see on the slide, 3 speakers for you today who are well prepared, hopefully, to discuss the Bank Secrecy Act and share some of our practice tips on compliance and enforcement in the credit union space. First, though, I do need to read off the following disclaimer. The materials presented in this webinar are intended as an informative and educational summary of general BSA compliance. The Ncua has taken reasonable measures to ensure the quality of the data and the other information produced by the Ncua that is available in this presentation. The Ncua, however, makes no warranty, express or implied, nor assumes any legal liability or responsibility for the accuracy, correctness, or completeness of any information that is available through this presentation, nor represents that its use would not infringe on privately owned rights. The slides are intended for educational and discussion purposes and do not constitute legal advice, nor replace independent professional judgment. Reference to any specific commercial product, process, or service by trade name, trademark, manufacturer, or otherwise does not constitute an endorsement, recommendation, or favoring by the U.S. government or the Ncua. All right, thanks. So now that you got through that, we're going to do a couple quick warm-up questions. We'd like to get a feel for who all we have participating today and a little bit of kind of information about the range of institutions that you're representing. There's going to be 2 different questions here, and we'll give you a short time to answer each. Please vote on the first one now by clicking the radio button on the slide next to the appropriate response for you or your institution. The first question, if you can't read it, it's a little small, says which asset range represents your credit union? The first choice is $0 to $50 million in assets. The second is $51 million to $250 million. The third choice is $251 million to $1 billion. The fourth choice is greater than $1 billion, or select the last button if you are not a participant from a credit union. So I will give a little bit of time for this one. Hopefully you mostly have, I don't have a dashboard in front of me, but I'm going to give you a few more seconds. And let us advance to see what the results of the first poll question are. Okay, so we have a pretty good mix here, you can see, with the greatest range represented from $51 million to $250 million in assets. So that's good. We're well balanced on that front. The second question, I'm advancing. You can please let us know how many BSA officers or dedicated personnel, or at least on a part-time basis, does your credit union have? So those individuals in your credit union assigned to BSA functions. 0 would be the first one. Hoping not too many of those. 1 to 5 is the second. The third one is 6 to 10. The fourth one is greater than 10. And lastly, again, please select that button if you're not in a credit union currently. And you should see, we should see the results here in just a second. I'm going to give 2 more seconds and advance this slide and see. Okay, well, that's based on percentages. So we have I don't have the full participation number of votes here, but we have 80+% have 1 to 5 BSA dedicated personnel in their credit union. So that's very interesting and that's helpful. And thank you for your participation. And as Cathryn also mentioned throughout the presentation, if you have questions for any of the speakers, either on the left side or at the bottom of your screen, there should be a dedicated Q&A option tab or a purple box. And if you click that and you enter a question, again, please identify if it's particularly directed to one of the 3 speakers, you should identify them by name if that would help us get the questions assigned. So moving to the next slide. In the first part of our presentation today, we hope to provide you with an overview of the BSA and Ofact compliance process from the credit union's perspective. For that, I'm going to put you in the able hands of Cathryn Martin of Tower Federal Credit Union. Kathy has worked in the credit union industry for more than 20 years with responsibilities in BSA, fraud, collections, regulatory compliance, and risk management. She has the NCCO and CAM certifications and is a member of the BSA Compliance and Fraud Roundtables in the Washington, D.C. area. Kathy?
Hi, I'm Cathryn Martin, the BSA Compliance Officer for Tower Federal Credit Union in Laurel, Maryland. I'm going to talk about building a strong BSA and Ofact program based on the 5 pillars. During this presentation, I'm going to talk about BSA and Ofact together because there are a lot of similarities in managing these requirements. There are 5 pillars of an effective BSA and Ofact compliance program according to the FinCEN rule, which was a compliance date of May 11th, 2018. A system of internal controls, independent testing, a person responsible for day-to-day BSA and Ofact compliance, training, and risk-based procedures for conducting ongoing customer due diligence. In this presentation, I'm going to give you some items that should be on your to-do list for meeting these standards. To run a BSA program, you must gather information from many sources. For example, employees with member contact, law enforcement, other financial institutions, news reports, OFAC or 314A matches, and, of course, your AML monitoring system. Whether you're using reports in your core or an automated monitoring system, you need to keep track of what data is being imported. The slide shows some examples of data sources you may be depending on. Remember, you can't assume that any of that data is actually being imported every day. You need to manage your system and determine when there are interruptions and fix those problems. These can result from system changes at the credit union or at any of the vendors that you're using. Use reports of daily imports or spot checking for each data type as internal controls over this process. Ofact can be very complicated, too, because different systems are often used by different business lines. For example, there may be separate Ofact systems for new members, wires, and loans. The credit union's program depends on all of the systems working and keeping the lists up to date on all of the systems. Internal controls are needed to manage all of these systems as well. Once the data is coming in and the systems are all turned on, you still need to manage the settings. This is where internal controls, that first pillar of your program, comes in again. The settings need to be correct for your credit union's membership and level of risk. A model validation can help with this. Also, you need to be an expert on your reports or monitoring systems. If there are changes in the functionality, you need to know about it. For example, if your monitoring system populates your SARs and CTRs, you need to be sure that the information is correct. We had a problem when our system started populating the SAR field for loss to FI instead of leaving it for us to fill in manually. Sometimes the information was incorrect. We didn't even know we had to check that field because we didn't know it was populating until an Ncua examiner brought it to our attention. Now we have a checklist in place to check particular fields before approving a SAR. You need to be an expert on regulatory changes, too. These changes can happen anytime. Long ago, way back in 2012, FinCEN ended the paper filing of CTRs and SARs. But I know of at least one smaller credit union that was unaware of this change and continued filing paper reports for another year. So it helps to sign up for email notifications from the agencies and from trade associations or any other compliance resources to keep up with the changes. There are a lot of deadlines in BSA and Ofact requirements too. Automated monitoring systems can help you manage them, but you may choose a belt and suspenders approach. You can back up your monitoring system with reminders on your calendar or spreadsheets and logs. For example, you can put an email reminder every other Tuesday to check for the 314A list, and you can log your investigations to track that SARs are filed within 30 days. The second pillar of your program is independent testing or auditing. This is one of the best ways to improve your controls. Make sure that the audit takes place every 12 to 18 months, and tell the auditor what parts of the program you're concerned about so they can give you feedback in those areas. Because auditors see programs at other credit unions, they may have good suggestions for improving your controls. If the auditor finds any problems, try to make the corrections right away so that they can be included in your final audit report. The third pillar of your program is to have someone focused on BSA and Ofact to manage the program. This is generally the BSA compliance officer. But you also need a team supporting the program, including BSA and Ofact staff and frontline staff, especially tellers and MSRs, for CTRs and suspicious statements. The fraud team can be very helpful to a BSA program, too. The departments have a lot in common. They both dig in and do research to figure out what is happening on an account. These investigations may turn up information that's helpful to the other department. Also, SARs have to be filed on fraudulent activity of $5,000 or more, and internal fraud of any amount. The two departments must communicate in order to get those SARs filed. The fourth pillar of the program is training. The board, volunteers, frontline, back office all need training to understand the big picture, including your level of activity and the requirements. IT needs to understand which systems you're using and how. Your BSA team needs more in-depth understanding. The BSA and Ofact department needs to understand the regulations. This training should come from certification programs, conferences, webinars, articles, newsletters, and more. The fraud and tellers and MSRs benefit from understanding the regulations, so webinars and other training may make sense for them too. In addition, the fraud and the tellers and MSRs need to understand the specific procedures that make up the program. Tellers and MSRs need extra training as part of their new hire process in the specific procedures that they need to follow. And fraud staff members need to understand which of their cases have AML links and when SARs need to be filed. They can also be trained to prepare the SARs. It's hard to get adequate training for staff that only have responsibility as a backup. One approach is to have them just learn one task at a time. Maybe start with Ofact checks and alert, then 314A, then CTRs. Even without formal training, they'll develop a better understanding of the requirements and procedures one area at a time. No matter what, the more people that understand BSA functions, the stronger the program will be. The fifth pillar is to have risk-based procedures for conducting customer due diligence. Customer due diligence has 4 elements: the customer identification program, understanding the nature and purpose of accounts, conducting ongoing monitoring, and reporting and handling the legal entity accounts. Based on the risks facing your credit union, you need to decide where to concentrate your customer due diligence efforts. What new tools and procedures do you need? What additional training is appropriate? Risks might come from the weaknesses in your staffing or systems. They could also come from the types of activity taking place. Some risks seem to be increasing throughout the industry, like marijuana business activities, synthetic identities, and anonymous payment technology. Your program should be designed to address your biggest risks effectively. Another requirement is to know your customers and understand their activity. At account opening, make sure to ask why the account is being opened and how it will be used. Is it a consumer account, a business account, or something else? For business accounts, make it clear if the credit union does not open accounts for money service businesses, marijuana businesses, etc. Ask what kind of activity they're planning for the account. Also, find out how the business or organization is set up. Is it a corporation, partnership, or other legal entity that requires gathering beneficial ownership information? Once the account's open and unusual activity is detected, you need to find out why it's happening. We'll review the account history and check with the branch that they use, but we'll also call the member to ask for an explanation. Other financial institutions have provided valuable information to us, too. The goal is to figure out whether the activity makes sense, is suspicious, or may even be criminal in some way. Conducting ongoing monitoring to identify and report suspicious transactions means keeping records of the activity and results of your investigations, filing SARs and CTRs, and continuing to monitor the activity. Also, restricting high-risk activity according to your risk assessment. We used to be reluctant to restrict accounts when there was no loss to the credit union. Sometimes we doubted our own evaluation of whether that activity was suspicious. In one case a few years back, the member withdrew his own funds and sent them to scammers. We warned him and law enforcement warned him, but the activity would start up again. Over time, the amounts kept increasing. We decided not to send wires for him. Then he started withdrawing large amounts of cash. We told him that he could only have $500 cash per day. He finally moved his account to a bank, and that bank immediately shut down his suspicious activity as well. That's when I got more confident about sticking to our risk assessment and not allowing member service to overrule our analysis of what type of activity was appropriate at our credit union. Here are some common examples of high-risk activity, at least that we see a lot. Romance scam, the members are wiring money overseas to their fiancé, who when we talk to them, we find out have never met the person. Unexplained large transactions, the members making large cash deposits followed by transfers to multiple accounts, maybe in a circle, coming back to the account again, and we can't get any information about why the activity is happening. A recruitment scam, we'll see large checks being deposited at the ATM. When we look at the photos at the ATM, it's not our member. Then the money's withdrawn with a debit card or using Cash App. And then money mule activity, the members are receiving wires and then sending on all the funds to people far away. They have some explanation about family, helping family. Recently, we've also had some members receive stolen unemployment benefits by ACH. During our investigations, we'll call the members when we see strange activity, and we ask them for information about the transaction, like the name of the person who sent them the money or who they think they're sending it to. If they can answer questions in a way that makes sense, we'll let the transactions continue. But often we learn that the activity is a scam against our member or money mule activity. It can be hard to convince the members to believe us and stop the activity, but if they won't stop, we will place restrictions on the account. Okay, now I'm going to try to do a pulse check. On this pulse, I want you to select green if you have caught stolen unemployment benefits at your credit union since May, and red if you haven't. Hopefully people can see this. So green if you've seen stolen unemployment at your credit union, and red if you have not seen any. I'll give it a few more seconds. Wow, it's pretty evenly split. I'll end the pulse check, but I'll tell you the way that we're catching it is by looking at the ACH as it comes in and checking for mismatched names, ACHs that come in from the different unemployment offices. Okay, we just had another one today, actually. Let me do another pulse check. This one, I would like you to pick green if you call and contact members during your investigations, but if you never contact members, select red. interesting. It's a lot of people are contacting members. I think it used to be people had the feeling, since we were doing it for SAR purposes, that you shouldn't contact a member because that might tip your hand that you're filing a SAR. But now we look at it as like a customer due diligence. We need to understand what's happening, and so it's separate from the SAR process. Great. I'm going to end that pulse check. Thanks, everybody. If the activity doesn't stop after warnings, the credit union has to consider placing restrictions on the account to bring the risk in line with your risk assessment. Here are some options for limiting high-risk activity. If you've been unable to verify the account holder's identity, you can close the account. If suspicious transactions continue on the checking account, you can close it. You can close debit cards or limit their activity, allow only POS, let's say, and no ATM deposits. You can block home banking and mobile deposit capture if you're seeing bad checks coming in that way, or members giving away their credentials. You can prohibit wires or refuse to create official checks if members seem to be using them for suspicious activity. Because staff members throughout the credit union may be involved in enforcing the restrictions, it's important that the restrictions are supported by the credit union's risk assessment, internal controls, and independent testing. The basis for the restriction should be part of your credit union's BSA and Ofact training. So, in conclusion, there are a lot of steps to creating a strong BSA and Ofact compliance program, but these pillars can guide you to success. Are there any questions that we should answer at this time?
Kathy, we have one question that I think we'd like to get you to answer. So the credit union was interested in the money mule activity, and they said, do you file a SAR using the member as the subject?
We do, because the member cooperated and did some of the activity. It is true that the members are usually gullible and have no idea what they're doing. We especially include we'll sometimes include the party that the money was sent to, but once again, that person can be a gullible, ignorant person again. But generally, we will include them, but sometimes we'll make exceptions. A wishy-washy answer, I'm sorry.
That's okay. Let's turn it over to Damon.
Thank you, Kathy and Cathryn. With that, we're going to turn to the NCUA perspective on some of these issues. Our next presenter is my colleague, Andrew Bludorn. Andrew is one of the BSA officers within the Office of Examination and Insurance at NCUA. Andrew has over 15 years' experience in the financial services industry. He first worked for over 6 years in retail banking, where he held several positions, including personal banker, licensed financial consultant, and branch office manager. He has worked at NCUA for over 10 years in different roles. He's been a supervision analyst, credit union examiner, and BSA officer, and he also carries a CAMS certification. So when BSA items are serious or persistent in a credit union, that's when Andrew's role and mine come into play at NCUA. For myself as a trial attorney, I work with NCUA program offices, including E&I and the regional offices, to take administrative action against credit unions or individuals within credit unions as appropriate. So Andrew's going to focus his portion of this part of the presentation on some of the BSA violations routinely cited by NCUA examination staff or state examiners as well. I'm then going to briefly chime in after each kind of section and give a real-world example of an administrative action that's been brought against a credit union in response to each type of violation that Andrew's covering. And with that, Andrew.
All right. Thank you, Damon. So today I'm going to talk about the top 5 BSA violations that are most cited by NCUA and state examiners and credit unions. I'll go over each of these in more detail in the coming slides. The first violation is for not properly completing FinCEN 314A searches. The second is for inadequate BSA training. The third is for inadequate internal controls around BSA. The fourth is for inadequate BSA audit or independent testing. And lastly, we'll talk about a variety of SAR and CTR-related violations together. We do have a reference page here with links to the Federal Credit Union Act, Ncua rules and regulations, and additional BSA resources and references that are relevant to today's presentation. So the first violation, most commonly cited by Ncua and state examiners over the last couple of years, is record search not completed within 14 days of FinCEN request. So this is where a credit union does not properly or timely complete their FinCEN 314A search. So FinCEN sends notifications to the designated contacts at every credit union every 2 weeks. Credit unions then have 2 weeks from that date to respond with any positive match. If there is no positive match, the credit union does not need to respond. Credit unions do need to maintain documentation that they ran the list against their membership. And then credit unions should have multiple employees who receive the notifications. The employees who will receive the notifications, employees will receive the notifications if they are listed as a Patriot Act contact in the CU online profile for the credit union. So every credit union should have at least 2 Patriot Act contacts listed in CU online. And the credit union should have policies and procedures in place establishing who is responsible for conducting and documenting the searches. This should include who will perform the searches when the primary employee is on vacation, out sick, or is otherwise unable to perform the searches. And then one more thing on this slide. If you notice there, we have a reference to the FinCEN 314A fact sheet. If anybody just needs to educate themselves on what FinCEN 314A is or educate somebody else, that fact sheet is a very good way to do it. So, okay, as Damon mentioned earlier, he'll be adding some case examples and talking about some enforcement actions. Damon.
Right. Thanks, Andrew. I have a case for each of Andrew's points here, but I should note in advance here I won't be drilling down deeply with a bunch of facts on each one of them, mainly because ones that involve active credit unions that are open, that wouldn't be appropriate. But every one I am sharing is a publicly available enforcement action if you want to pull them up for yourselves at any point or just know that that resource is out there. The NCUA's public enforcement actions are available on our website at www.ncua.gov. If you click on the regulations and supervision tab, that should be across the top, and then on that page, or you can click on the enforcement actions tab, that would be in the left margin. So for the first example, I'm going to use North Dade Community Development Federal Credit Union, which in 2014 was assessed a $300,000 civil money penalty for BSA and anti-money laundering violations. North Dade held $4 million in assets with less than 1,000 members, and yet it serviced over 50 money service businesses. These MSBs were often wiring millions of dollars monthly to high-risk foreign jurisdictions. So in this case, BSA violations were found to be systemic, and in addition to actions that NCUA had taken, the Treasury Department's Financial Crimes Enforcement Network investigated the credit union. Ultimately, this institution received a $300,000 penalty from FinCEN, and one of the ultimate determinations in the FinCEN action was that the credit union failed to access or review 314A lists on time, or at all in some cases, over the course of a year that they focused on. At NCUA and other cases, I've dealt with 314A violations in credit unions where we've seen either a lack of procedures entirely, a lack of documentation of the procedures they're following, or failure to adequately run the searches on a timely basis. So our response as an agency here has ranged, in my practice, from informal administrative actions all the way up to a cease and desist order where we require a change in the behaviors that are found by the examination staff. And with that, I'll go back to Andrew.
All right, thanks, Damon. So our second violation is for no or inadequate training for appropriate personnel. One of the first questions that our examiners get from credit unions in regards to BSA training is, who is appropriate personnel? So if you read this excerpt from the FFIC BSA AML manual, we learned that it covers pretty much everybody in the credit union. But first, let me say one thing about the FFIC BSA AML examination manual. The manual uses the word bank. And so throughout my presentation today, I referenced the manual several times. And I left the quotes from the manual as is. So when you see the word bank, please know that in the manual, the definition of bank includes credit unions. So if you read this, just about every employee of the credit union should receive basic BSA training because just about every employee of a credit union needs to know about BSA. And the BSA training should be specific to their position and their responsibilities. So what type of training is adequate? The training should cover the basic regulatory requirements of the BSA and the credit union's policies, procedures, and processes. This is something that every credit union employee should know. As noted on the slide, the training should also be specific to each employee's business line. So tellers should receive training relevant to being a teller, and a loan officer should receive training specific to being a loan officer. Many credit unions choose to provide basic BSA training to all of their employees and then add more specific BSA training to certain individuals as needed based on their responsibilities. One reason this violation is cited is due to the BSA officer having little or no training. As we noted in the past two slides, the training should be tailored to the person's individual responsibilities. So while not every employee will need specific BSA training beyond the general BSA training provided to most employees, the BSA officer and those in the BSA department will likely need additional training to keep up on all the regulatory requirements of the BSA and to ensure that the rest of the credit union is properly trained and adhering to the BSA. Another reason this violation is cited is due to senior management or the board of directors not receiving adequate BSA training. Once again, we have an excerpt from the FFIC BSA AML manual, and it states that the board and senior management need to be adequately trained to understand the importance of BSA AML regulatory requirements and the ramifications of noncompliance. The board cannot adequately approve BSA policies and procedures and cannot adequately staff the BSA department if they don't understand the importance of BSA. The BSA department should ensure that management and the board of directors are receiving adequate BSA training so that they can manage the credit union properly. So this is the last slide we have on the training violation. And examiners, they'll need to verify that this training was administered. And the only way they can verify it is if the credit union keeps a log of when the trainings took place and who attended. It is also best practice to retain the training materials and testing materials so the examiner can review them. In my experience, the more information a credit union retains in regards to its BSA training documentation, the less likely it will be for them to be cited for this violation. Now we'll go back to Damon for another case example.
Before you take over, Damon, we have a couple of questions for Andrew. Andrew was trying to escape. You can't escape, Andrew. You've got to answer a couple of questions. So here we go. So the first one, this is a good question from credit union. It says, when it comes to job-specific training, what criteria would an Ncua examiner look at to determine if the training is sufficient to meet requirements?
Okay, so I touched on that a little bit when I was talking there. For example, a teller needs to be, versed in BSA in the sense of what to look for suspicious transactions, when to file a SAR, when to file a CTR. So if the general BSA training doesn't already include that, every teller or MSR would need more specific training to cover those requirements. Same thing could be said for a loan officer. They generally maybe wouldn't handle cash at most credit unions, but there may be a time where BSA is applicable to what they're doing. So the BSA officer and BSA department should ensure that, positions like loan officer receive adequate BSA training so they know what to do when certain situations arise.
Okay, and you have one more, Andrew. So the credit union wants to know, for example, like this webinar that we're doing on bank secrecy, is it required of all credit union board members or just board chairs? Okay, so if I understand the question, this webinar specifically is not required. This is just a general training that it would be good to have, your board of directors attend if they have availability. But when it comes to BSA training in general, not just the board chair, but the entire board should be trained on BSA. Wonderful. On to you, Damon.
Okay, and For mine, we're going to actually go back to the previous credit union. We're sticking with North Dade Community Development Federal Credit Union that I mentioned in the first case example. However, we're going back in time a year prior to when the Ncua first took note of some of the violations, and we took formal administrative action at that time. So that was a cease and desist order. Under the Federal Credit Union Act, that's our statute, Ncua is required to bring a C&D when certain conditions are present in the Bsa or AML program if there's violations that meet the statute and violate our regulations. So, and I will note for those of you not familiar with the cease and desist action, and hopefully not many are, that they can be affirmative or prohibitive, so we can require specific steps be taken or can require the cessation of certain activities. So in a Bsa case, you might have both. You'd have program requirements not being met, so Ncua's C&D would require that the credit union take steps to create or improve Bsa compliance. And you may also have activities that are restricted, such as servicing MSB members, that if it's either a safety and soundness issue or a programmatic issue where you're just not in a position where you can properly service that type of membership, or maybe your field of membership doesn't allow it. So in this case, North Dade Community Development, FCU, had a laundry list of Bsa violations. So multiple things were addressed with the cease and desist order, but among them were Bsa training violations. And this demonstrated the need for adequate training of all staff, like Andrew just mentioned, as well as officials on Bsa compliance issues. So as part of a long list of items that required action under this particular cease and desist, the credit union was given 30 days to hire a compliance officer and then 60 days to get all the employees of the credit union adequate Bsa training. And I will turn it back to Andrew.
All right, thanks again, Damon. Our next violation is cited due to an inadequate system of internal controls to assure ongoing compliance. So what does this really mean? Well, this violation can be cited for a few reasons, as you can see listed on the slide. I'm going to go over each one of these bullet points one by one in more detail. First, let me just say that Bsa is like other areas in a credit union in that there is inherent risk in doing business, and not all the risk can or should be avoided. As with other areas, credit unions should take a risk-based approach to Bsa. So on to the first bullet point there. Oversight of the Bsa program is not adequate for the size or complexity of the credit union. This is generally due to not enough resources devoted to Bsa. As we noted in the poll question early in the presentation, over 80% of you have between 1 and 5 people in your Bsa department. Oftentimes, the Bsa department maybe doesn't get the attention or the resources that it deserves. So credit unions that are larger, that offer expanded products and services, or that have a community charter may need to devote more resources to Bsa than other small and less complex credit unions. On to the next bullet point, suspicious activity review is insufficient to detect structuring. So many smaller credit unions use manual tracking systems to try and detect structuring and other suspicious activity. While this is adequate in many cases, oftentimes these systems are lacking in various aspects, such as aggregating transactions over a period of time, or looking at a member's multiple accounts, or including business accounts in that aggregation, just to name a few. This can also apply to credit unions with automated systems, though, as well. Automated systems that are either built into their core processor or separate systems. The controls need to be set and understood by the credit union, and the reports need to be reviewed and acted upon appropriately and timely. Which brings us to the third bullet point, not reviewing alerts timely. Several credit unions have purchased new systems to help detect suspicious activity, but they either don't understand the system's capabilities or don't accurately or timely review the alerts. The Bsa department needs to know how to effectively use the systems at their disposal. On to the next bullet point, high number of exceptions during the Bsa review. So if the Bsa audits or independent testing show multiple exceptions or findings, or if the Ncua review or state review continues to show multiple Bsa deficiencies, similar to other departments in the credit union, the Bsa department needs to have policies and procedures in place that help them maintain compliance. And credit unions should establish a quality control procedures to help ensure compliance with the Bsa. And then no or inadequate risk assessment. The risk assessment can be simple for smaller or less complex credit unions, but they still need to have one to demonstrate that they understand the inherent BSA risk and can show how they plan to reasonably mitigate that risk. Larger and more complex credit unions should have a more robust risk assessment. A well-developed risk assessment can assist the credit union in identifying BSA-related risk and in developing appropriate internal controls to mitigate that risk. The risk assessment is generally one of the first things that an examiner reviews in regards to BSA, and it can show the examiner that the credit union understands the BSA-related risks in the credit union. So I'm going to pass it back to Damon for another example here.
Okay, so this one for internal controls will be brief because this is a recent and open credit union. I'm just picked it off of our website. This is not a case I handled, but it's Phi Beta Sigma Federal Credit Union, and it's pretty representative of other ones I have handled in as much as it addresses deficiencies in BSA procedures that needed to be developed further, and then certainly internal controls problems and documentation that was lacking. So that the specificity in the C&D can vary. That's where our job as general counsel is to work with the regions to develop an appropriate tool, an appropriate notice of charges, and go back to the credit union and make sure the steps are taken to address specific items like the ones Andrew just pointed out. So that's all I have on that one, Andrew.
Before you start, Andrew, I just want to ask our audience, when you're sending your questions in, please address your question to the speaker. So Andrew's getting ready to talk now, so please address your questions to him or Damon or Kathy. Thank you.
All right, thanks. The fourth violation we have here, we're going to talk about today, is for no or inadequate independent testing. So independent testing is also referred to as the BSA audit, should be performed by a qualified individual who is independent of the BSA department. So if you only remember two words from this slide, let it be that the independent testing needs to be performed by someone who is, one, qualified, and two, independent. So qualified and independent being the two big words. This could still be an employee or a volunteer of the credit union, as long as they are independent of the BSA responsibilities and qualified to test for BSA compliance. Generally, we see an outside auditor will perform the independent testing. The regulation does not stipulate a time frame for the independent testing. However, the FFIC BSA AML examination manual states, as shown on the slide, that having it done every 12 to 18 months is a best practice. So back to Damon for another example.
Okay, so for testing, I'm going to use Defense Logistics Federal Credit Union, which holds less than $1 million in assets and has only one employee. And this kind of represents some of the challenges of a small credit union operation in this case. A broad look at the circumstances involved shows it's pretty indicative of a small credit union situation where, with one employee, there are things that were not being run in a safe and sound manner, and compliance was lacking on a number of fronts. Looking specifically at the Bsa program, it lacked a number of important elements requiring examination staff to recommend formal administrative action. So we issued a C&D order in 2019, which required a number of independent audits be done on the Bsa program. Well, included both a look-back Bsa audit from the current outside auditing firm to complete a past year, and then also the retention of a new qualified third party to conduct a current Bsa audit. In this case, if you happen to pull it, you'll see that it's completely current. Some of the deadlines are not passed yet. So again, I'm not going to go any further, but that is a real-world example. Go ahead, Andrew. Uh-oh, wait.
All right.
Yeah, slide. Oh, you took it. Okay, there you go.
Whoops. All right, that's the right side. There we go. Okay. So the last of our top 5 violations that we're going to cover today, we have several SAR and CTR-related violations that we kind of grouped together for this group. We see a lot of violations because credit unions are not following the SAR and CTR timing requirements. So we're going to have a reminder of that today. A SAR needs to be filed within 30 days of the date of detection of the suspicious activity if the suspect is known, and 60 days from the date of detection if the suspect is unknown. So on the next slide, I'll cover a little bit more about when to file a SAR. I'm going to continue on this slide with CTRs. So CTRs, the credit union needs to file within 15 days following the day on which the reportable transaction occurred. Say that one more time. So for CTRs, the credit union needs to file within 15 days following the day on which the reportable transaction occurred. Okay. Other common mistakes we see in regards to CTRs, aside from not being filed timely, include the form not being filled out completely or correctly. Remember, credit unions should have a formalized quality control process to review SARs and CTRs before they're filed with FinCEN. And FinCEN has reminded financial institutions to complete all of the non-critical fields for which they have information. So what's a critical field? What's a non-critical field? So critical fields include customer information like name, date of birth, social security number, et cetera, the date of the transaction, the amount of the cash in or cash out. Examples of non-critical fields include the member's occupation or type of business that they are in, NAICS codes, their phone number, email address. While these are not critical fields, FinCEN has stated that financial institutions should complete these fields if they possess the information, and this additional information could be a great assist to law enforcement. So moving on to the next slide, as a reminder, SAR needs to be filed within 30 days of the date of detection of the suspicious activity if the suspect is known, and 60 days if the suspect is unknown. So a credit union also needs to understand when a SAR needs to be filed. So this is listed in 748. A credit union must file a SAR for any known or suspected crime or any suspicious transaction related to money laundering or illegal activity. So for example, terrorism, loan fraud, embezzlement, or any violation of the Bank Secrecy Act. When a suspicious transaction totals more than $5,000 or more, the credit union needs to file a SAR if the suspect can be identified, and then they need to file the SAR for when the suspect cannot be identified once that totals $25,000. So 748 outlines that a SAR needs to be filed for insider abuse of any amount. So anytime a credit union official or employee is suspected of a crime involving the credit union, a SAR needs to be filed regardless of the amount. One exception I like to point out in regards to filing a SAR is a credit union is not required to file a SAR for a robbery or burglary committed or attempted that is reported to the appropriate law enforcement authority. All right, and we'll pass it back to Damon for another case.
We've got a question for Damon before he gets to his case. Are you ready, Damon?
I'm ready. Go ahead.
All righty. Let's see. So here's your question. Oops, where'd it go? So the credit union wants to know, is there a particular order a SAR narrative should be completed to be most effective? So they said, for example, should they start out with the reason for the filing and specifics, or begin with historical information about the subject being reported?
Okay. So the best practice is to usually start with a brief introduction, paragraph or a couple sentences that explain the basic purpose of the SAR, what triggered the filing, what noting red flags and like important information, but saving most of the details for the body, if you will. In which case, the best rule of thumb is to answer the 5 W's, go through sequentially and talk about who, what, when, where, and why as appropriate, filling in details there. And then, chronologically within that section makes most sense. That's definitely what is preferred by FinCEN and law enforcement, to kind of craft the narrative that way. And then, I would note that FinCEN does have guidance on this at fincen.gov. So you should be able to, they have a slide deck as well as FAQ. I don't think FAQs on it necessarily, but there is there are various training documents that you can use. And it's also important to not assume that upon the reading that they're going to have specific information, even if, you filed a series of SARs, or if you feel like it's a common occurrence and you're using acronyms and things like that. You should try to avoid that. You should just treat it as if they're going to be looking at this for the first time and don't have any information in front of them. before their investigation begins. So I think that answers that. And
you're good.
I will move. Okay, great. And I think we're on my case example now. So for number 5, we're going to use a credit union from the Bronx called Bethx Federal Credit Union. The case study is from 2015. It's a credit union that had $13 million in assets, and a few years prior to the time of the action, it had begun providing services to numerous commercial MSBs, including ones located in high-risk jurisdictions and some that engaged in high-risk activity. Ultimately, FinCEN had their own investigation on this one as well, and it resulted in another civil money penalty being levied. This time, for this credit union, it was $500,000. FinCEN, in its determinations in its order, cited the extensive MSB activity and inadequate AML procedures, and in particular, one of the repeated and egregious examples of noncompliance was SAR filings. And Bethx failed to file SARs over the better part of a 3-year period, even for large dollar wires, very large dollar wires. So ultimately, that led to this action, and eventually the credit union did close by the end of 2015. And speaking of that type of result, abnormal result beyond the C&D, that eventually closed. But we also have, as you're probably aware, conservatorships that the NCUA brings in certain cases. And in fact, that's why we're going to discuss this here, because BSA can lead you to that as well. This case was handled quite a bit before my time. It was in 1999. And of course, I'm not saying that this or any of the administrative action tools that I brought up are our entire arsenal, if you will. But I did want to point this out because, maybe some of the attendees are not aware that conservatorship can be the result of failure to have an adequate BSA program. So based on a series of serious deficiencies at this institution, which is Polish and Slavic Federal Credit Union, the credit union was placed in conservatorship, and Bsa violations were one of the bases that we cited. And also, if you're not familiar with how these go, most of these conservatorships or also our liquidations are not challenged, but there is a procedure to do so in the Federal Credit Union Act, and this one did. They took it to court, and a series of court cases resulted, and ultimately the Second Circuit Court of Appeals, a year later, upheld the lower federal court's ruling, saying that the NCUA did have substantial grounds to seize a credit union, go in as conservator based on the grounds that we listed. So those, like I said, did include BSA violations. And I would say it's also a credit union of interest because, as a case example, because there aren't that many conservatorships that we do that are considered success stories where the institution is able to be released back from their administrative action and then return to the controls of the membership. And this is one of those cases. So they're active today, and I think it's a good case study to end on because this both serves as a cautionary tale of kind of the extreme of what BSA violations can lead to, but also encouraging as a study that those BSA violations can be rectified and in terms of our enforcement actions can be met satisfactorily. And Polish and Slavic expanded after the conservatorship, and today they have branches in 3 states. So with that, Andrew has the final slide.
All right, thanks, Damon. Yeah, I'm just going to go over a quick summary of what we talked about in this section of the presentation. So for the 314A searches, credit unions need to establish policies and procedures to ensure that FinCEN 314A searches are happening and they're happening on time, and that there's a backup procedure for when the primary person is either on vacation, out sick, or otherwise unable to perform the search. And then just to make sure those searches are documented. Number 2, with training, credit unions need to establish an annual BSA training program that includes BSA training for most employees and specific BSA training for certain employees, additional training for the BSA officer and BSA department, and you would also need adequate training for the board of directors and senior management, and then you must also retain documentation of the trainings. For number 3, credit unions need to give the BSA department appropriate resources based on their size and complexity. The credit union should have a thorough system for monitoring for suspicious activity, whether it be a manual system or an automated system. It's also important for the credit union to have a well-developed risk assessment that can assist the credit union in identifying BSA-related risk and in developing appropriate internal controls to mitigate that risk. And once again, the risk assessment is generally one of the first things an examiner reviews in regards to BSA, and it can show the examiner that the credit union understands BSA-related risks in the credit union. Number 4, independent testing. Please remember the 2 words I mentioned. The person that conducts independent testing needs to be independent of the BSA functions and qualified to perform a BSA review. And then the independent testing should be completed every 12 to 18 months as a best practice. And then the last one for SAR and CTR violations, remember CTRs need to be filed within 15 days of the reportable transaction, and a SAR should be filed within 30 days unless the suspect is unknown, and then you have 60 days from the date of detection of the suspicious activity. So before we move on to our Q&A, I just wanted to say thank you to each and every one of the credit union BSA employees on the webinar today. BSA is often a thankless job, but it's the work that you do that helps keep your credit union safe. It also helps keep the United States financial system safe, and it also helps keep the world safe. As a BSA officer for Ncua, I communicate regularly with law enforcement, and I love hearing success stories from them on how a SAR from a credit union helped them build a case against a suspected criminal, or how a tip from a credit union helped them shut down a human trafficking ring. Most of the time, the credit union will never know the impact that they made and how they made the world a better place, but please know that your BSA work is much appreciated. Thank you.
Wonderful. That sounds great. That was a great admonition and a compliment for our credit unions. Thank you so much, Andrew. Before we go into the Q&A, I want to remind our credit unions that are on that there's a survey. You should see a widget on your console that says survey. It's really brief. While we're going through the Q&A, would you mind doing that for us? Because we really value your opinion. We'd like to know what we can do to improve and if you benefited from this webinar. And also, here's Andrew's contact and his coworker, Cindy Johnson. They're the BSA officers with NCUA.
And then can I jump in real quick here?
Absolutely.
I see a lot of questions in the queue from the audience, and I already know we're not going to have time to get to all of them. So if we don't get to your question today and it's something that you really want answered, please jot down the email that's on this slide right here, the BSA policy at ncua.gov. And then myself and Cindy, we manage this mailbox, so we can answer any questions you have through there if we don't get to them today.
Okay. So, yeah, we're going to do our Q&A. We'll get to as many questions as we can before we end at 4:30. This is the contact information for CURE, who in conjunction with the Office of Examination and Insurance put on this webinar. And I also want to remind all of our credit unions that this webinar will be housed in our learning management service. If you're a credit union employee, this is a free service for you. Please use the URL up there at the top to open, to set up an account for yourself. Very easy. And this webinar will be there. It will also be on ncua.gov in approximately 3 weeks. But we house all of our training materials, including our BSA information, webinars rather, on this learning management service. So now let's hit our Q&A. And we have quite a few questions, so we'll get to as many as we can, but if we don't get to you live, we certainly will have answers to you thereafter. So, Kathy, are you still with us?
Yes, I'm here. Can you hear me?
Yes, I can. Very good.
Okay,
so
good.
We're going to give you...
only official list that I have found of these unemployment offices information is something that U.S. Secret Service put on the 314A website. They sent out something originally in May, and then they sent out a follow-up. It's dated June. It's under the What's New links on the 314A website, and it's called U.S. Secret Service Alert. It's updated to June 2nd. And that one, they give a bunch of information about 10 or more unemployment offices.
Okay. So now let me ask you
a few people asked that question.
Okay, but so that the audience can hear the question, let me ask it first. Okay, so here's the first one for you. So one credit union wants to know, how involved is your IT department in your BSA program?
They take our phone calls. I mean, they're very nice. No, they're not involved at all. It's really outsourced because we have an automated monitoring system that's hosted elsewhere. So our IT department does not have to do very much at all in our program.
Okay. So I'm going to ask you one more question, and I'm going to move on to Andrew. Another credit union wants to know if you have an example that you can think of off of the top of your head of how a loan officer might be involved in a BSA issue. How might that come across to a loan officer?
Some of these things, the training is sort of like not specific BSA training. The training is, you're an expert in being a loan officer. You know when something is different from everything else you see. So part of it, they, just like a teller knows, no one else acts like this at the teller line. The loan officer also knows this is not what usual loan applications look like. But on top of that, I would say when it seems like the person has the money and why are they taking out the loan, that's a common, money laundering approach, is to purchase something with a loan and then immediately pay it off because they had the money, but then it looks like they the money's clean. So that's one of the main ways that I think a loan officer would know. But if a person also is applying with fraudulent information, fraudulent pay stubs, a false identity, and they pick up on that, then we need to file a SAR on it. So there can be a lot of things coming from the lending area. From lending and collections can pick up on those things.
Very true. Okay, now we're going to go to Andrew. Are you ready for your first question, Andrew?
Yes.
All right, very good. So this is a good question from a credit union. They want to know where they can find good examples of how to complete CTRs for various situations, including cash activity for business, LLC, and sole proprietorships. Is there a resource that credit unions can get access to that we know about?
Yeah, so FinCEN puts out some publications and some, I believe they call them FAQs. So FinCEN should have an FAQ on SARs and an FAQ on CTRs. And those FAQs they play out a lot of different scenarios of, when to file, how to file, what to document, and so forth. And so you should be able to find those on FinCEN's website. I also believe that we have a link to those documents on the Ncua.gov BSA website.
Okay. So here's another question for you, Andrew, and then we'll skip down to Damon. So the credit union wants to know, if you find that a CTR was not filed within 15 days, do you still file it late?
Yes. At that point, you'd still want to file the CTR. It's better to file it late than not to file it at all because, if it was found later that it wasn't filed, even if it was several months later, you'd likely still have to refile it. So file it on day 16 or 17. It's better than not filing it.
Okay. All righty. So now we're going to skip down to Damon. Are you ready, Damon?
We'll see. I'm here.
Okay. So here's the question. Actually, Damon, the credit union said this could be for either you or Andrew. So, Andrew, if you want to chime in after Damon, feel free. But here's a question for you, Damon. It says, for SAR continuing activity, should the narrative include information from the previous SAR?
Okay, I can do that. So we do not need to ask you to repeat the entire narrative or anything like that. You can cite the SAR, the previous SAR, by number and give specifics about the previous SAR without having to duplicate the narrative.
Okay. Let's see. We have some pretty long questions. Let me see if I can get a shorter one. Oh, this is a good one. So here's another one for you, Damon. The credit union says, is BSA training required for the supervisory committee?
Well, Andrew had answered that one, I believe, that we're looking for all officials in the credit union. Is that Andrew?
Yeah, I'll agree with that. I believe that the supervisory committee should receive BSA training. I don't think there's a mandate that says they have to, like there is at the board of directors.
Yeah, I don't like this.
But depending on what the supervisory committee is reviewing as part of their responsibilities, if they're looking at anything with BSA, then they would need to have BSA training.
Okay. So now let's skip back up to Kathy. Kathy, are you ready?
Okay. Make it an easy one.
I'm looking. You know, we don't always get easy ones. Kathy, here's a question. This is a good one. The credit union says, do you recommend asking the reason for outgoing wires, both domestic and international?
We do ask the reason for outgoing wires, and it's actually there's a place to record it in our system. And it's helpful and can give us something to ask the person about. But it really even goes further than that. One time, one of our members wrote that they were paying like custom fees. Well, that's a common scam that the romance scammers or whatever they are tell the person, you know, oh, now there's some custom fees due on this package of gold that's about to be released to you or whatever it is. So when we saw that, we knew to call that member and refuse and tell them we weren't going to send the wire. But we do our international wires through Western Union, and a lot of times they'll contact us and ask like 5 or 6 questions about the wire before they'll be willing to send it. So it's really important to understand why a wire is going out as much as you can.
Very good. Here's we have quite a few nice questions for you, Kathy. Here's another one. The credit union says, could you elaborate more on how you're able to identify unemployment fraud via ACH credits?
So I'm not no ACH expert, but the description that usually shows up in the transaction history or on the statement, you know, says like unemployment benefits, but it also, there's all these weird ways. Each state writes it different. And if you look at that updated alert from United States Secret Service dated June 2nd, it lists the codes, the key numbers, that description, and all that, so that what you can do is a query saying, for all ACHs coming in from these entities or with these, you know, characters included, are there any where the name, the payee name does not match any name on the account? That's the sort of query that we're doing and catching them.
Okay. I'm going to go to Andrew, and then I'm going to hit Damon again. So, Andrew, here's a nice question for you. The credit union says, can you elaborate on the difference between date of detection and date of determination?
I assume that's in reference to suspicious activity. So the date of detection would be the day that you detect the suspicious activity, whereas the date of determination would be the date that you determine that you're going to file the SAR. And so let me just peek down at my notes here to make sure I'm going to say this right. So we have 30 days from the date of detection. So you have 30 days to make that determination on whether you're going to file the SAR or not, and then to file it.
Okay. Let's see if I can get you another one. So this credit union wants to go back to BSA training, and they're asking a question about what regulations or rules require supervisory committee to have training.
Okay, yeah, like I said when I answered that earlier, I don't believe that there is in our regs an actual that says the supervisory committee has to have BSA training. But what I would say there is the reg says appropriate personnel. So if the supervisory committee is performing any duties that's oversight of the BSA department, or if the BSA department is reporting to the supervisory committee, then they would be appropriate personnel that would need to know BSA.
Okay. So now we're going to go to Damon. Okay, Damon, let's see. Here's one on a SAR. And Kathy, you may want to chime in on this too, but this is for you, Damon. The credit union wants to know if they're filing multiple SARs on a member, at what point can they close the account?
Yeah. Okay. So yeah, that is going to be maybe more in Kathy's wheelhouse on describing formulation of the BSA program, because that's not something. The answer to that question is there isn't a regulatory threshold or an instruction that has to be at a certain criteria, certain set of circumstances. We would want a policy that addresses it, though. But I would defer as far as more details on that to the examiners or to Andrew or to Kathy.
Okay, Kathy, you want to chime in on that one?
I had it muted, sorry. This is a tough situation. So first off, federally chartered credit unions can't close an entire membership without expelling the person. So, but you can just close their checking account anytime that you feel like a restriction is necessary on their account. What we do is we rely on our sort of restriction of services policy, and that's quoted in our member account agreement. So we have this language: a member may be denied products and services if their account is not maintained in a manner in accordance with our account agreements and normal financial practices. So, okay. The question again was, when do you decide enough is enough? Well, it's, I guess, based on the risk assessment. When do you decide we can't take this anymore? The person's not answering our questions, not explaining why this activity is continuing, and the risk has just gotten too extreme. So like the example that I gave you of the guy, he was giving money to scammers. Well, at first it's like, well, it's his own money. He can spend it how he wants, right? But then when it starts to get to being a large amount of money, then we start saying, okay, what kind of reputation risk do we have here? Are we looking forward to seeing, a story in the newspaper? I know no one else reads the newspaper except me. Okay, a story somewhere that says, Tower Federal Credit Union allowed scammers to take all my money. Well, I don't want to see that story. So it's sort of a judgment call in some ways, depending on what the kind of activity is. But that's when we're, these restrictions, it's really hard. It's a tough balance to decide what you can allow and what you can't allow. But that's what we use, that sort of language from our restriction policy.
I got you. So the credit union is basically going to make that determination on that, is what you're saying?
Yes.
Depending. Okay, that'll work. Let me jump back to Damon. Damon, I have a question. I'm going to try to make this question short because it's a little long. Basically, it's a SAR question. The credit union had a disabled veteran that was subject to financial abuse from a caretaker. Police reports are filed and arrests are made, restitutions to come. So the credit union said the amount is under $5,000. So is filing an SAR as a legal activity, even if law enforcement is already involved? I know it's a long question, but I tried to shrink it down.
Right. Well, I would say go ahead and file the SAR, given if it meets the criteria. So if you're following your policy, it sounds like in that case, it would be appropriate. There's a violation of law, and I don't have at hand an exemption for the fact that it's already a case in process. I think the law enforcement generally wants a record. The SAR database forms a record that's useful, over time, and it's not about just prosecuting that one crime, so that you can get restitution, but it's also about tracking the greater system. So it's important to FinCEN to have that filed if it would otherwise be filed.
Okay. All right.
I mean, I would chime in on that and say,
Sure.
sorry, this is Kathy again. We do file under 5,000 sometimes, especially if we feel like it will help in the prosecution and maybe make it easier for law enforcement to get documentation. Especially if we know there's a real case going on. So we would be likely to file in that case.
Okay. All right, let's see what we're running out of time. We're going to take a couple more questions. Let me pop back to Andrew. I'm trying to get some that are kind of short. Some of these questions are a bit long. So here's a question, Andrew, for a credit union. Are you ready?
Yes.
Okay. So they said if you decide not to file a SAR, that needs to be documented as well? That's a question.
Yes, correct. So a lot of times you might detect suspicious activity. What most credit unions process is they'll open a case and they'll have someone kind of review that case. And they'll look at all the other circumstances, the member's account, their other activity, and then determine if it actually is something they need to file a SAR for. If it's something that, of course, was significant enough that you opened a case for it to investigate it, but then not significant enough that you decided not to file a SAR, you should be maintaining documentation of why you decided not to file that SAR. And that can be as simple as just, one sentence saying, hey, this was an open case, we reviewed this, these are the mitigating circumstances, and we didn't think it was worthy of a SAR. So yes, I would advise to maintain documentation for that.
Okay, fantastic. Here's another one for you really quick. The credit union wants to know, what is the record retention requirement for training, for BSA training?
Ooh, I'm not sure if that's specified like specifically for training, but I know pretty much a lot of the BSA things are 5 years. So most examiners aren't going to look back much further than the last 12, maybe 24 months based on the exam cycle. So I'd say as far as an examination perspective, you're probably good just maintain the last 2 years. But for your own, you'd have to double check with the record retention requirements to be sure, but I'd go to at least 5 years to err on the side of caution.
Yeah, that's what the manual recommends. Examination manual for BSA AML.
Okie dokie.
Thanks, Damon.
So now, since we've got Damon back, here's another question for you, Damon. The credit union, I can't talk. The credit union wants to know if there's a status on the legislation to increase the reporting amount to $30,000. You know anything on that?
Okay. There have been, I think, more than one pieces of draft legislation introduced discussing it. I don't think there's anything with it that I'm aware of that has an active. I mean, there have been no changes. I know that. So I guess that would all be legislation in progress. With my ear to the ground, I know that there's certainly. I'm sure y'all know that from the industry, having made those requests. But dealing with other agencies and law enforcement, there's always going to be a push-pull on that. I don't know what the status of, where it's going to go. I can't be a fortune teller. We don't have any new changes yet. Okay,
good. One last question for you, Damon. So this goes back to the date of detection. So the credit union said, what event qualifies as date of detection when the alert generates in your software? That's a question for you.
Okay. Well, I'm not as well versed in the software, but I think we already did kind of imply that. I mean, basically, yeah, there's a detection date, which is going to be at the point, it rose to the level of attention, the discovery in the credit union. So that would be appropriate, it sounds like to me. Maybe Kathy could, she uses monitoring software probably that I don't have access to, but that would be if that's the first indication the credit union had, then that would be appropriate.
Did you have any comment, Kathy?
My only thought on that is, we get our BSA alerts every 2 weeks. If you had something set that you only got your alerts every quarter, I wouldn't believe that Ncua would accept that something happened 2.5 months ago, but you didn't look at it till now because you set your alerts to only come once a quarter. So as long as they come pretty frequently, you can. I would make the argument you could do the date of the alert being created.
Okay.
Right. Willful blindness is not going to be something that's an excuse for sure.
That's for sure. So Kathy's going to have the last question, and then we're going to have to end. Kathy, here's a question from credit union. They said, do you always file on elder abuse, or do you oftentimes simply make a report to the particular adult or human services agency?
Good question. We do both. So we make the report and then we file. We will file on elder abuse when it's under 5,000.
Okay.
So pretty much we will, unless it's like nothing to do with money. Then we might not file on a SAR on it.
Okay. So let's see. You've got 1 minute, so I'm going to ask you one more question. Let's see if I can give you a quick question, Kathy. So credit union wants to know, should you file a SAR for members who deposit fraudulent checks? If yes, should you file for checks under 5,000?
We file on members who deposit fraudulent checks, but only if they're over 5,000. One situation that we have that's a sort of gray area, I guess, is when the member gave out their mobile deposit, their home banking credentials, so that some criminal, they thought they were applying for a loan or something, and some criminal deposits the check into their account, and then they call us and say, what the heck is this check? We don't really file against the member then, because we don't really feel like they knew it was coming, and they weren't really involved. And then we don't usually know who sent it, so we can't really file in that unless it's over 25,000.
Oh, wow. Okay. Well, ladies and gentlemen, thank you so much for your time. We want to thank our speakers, Cathryn Martin with Tower Federal Credit Union, Damon Frank with our Office of General Counsel, and Andrew Bludorn with the Office of Examination and Insurance. We'd also like to thank our behind-the-scenes guy, Franz Ayento. We couldn't do it without him. Thank you, Franz. We'd like to thank our interns that are working with us today, Cam Du and Ashley Clark, and also Patty Hunt that was working with us today. Thank you all. So we're going to end this webinar now. We thank you again. We hope you were able to fill out the survey for us and let us know what you thought. And we'll see you next time. So everyone have a wonderful afternoon and a great week.